What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 30th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to cut straight to the chase and dive into a wide range of different cryptocurrencies across the board in the market to get a good gauge on sentiment within crypto, not just for Bitcoin and Ethereum, but for the broad cryptocurrency space. And outside of this as well, talk about really the one major macro factor right now that really will help us understand and determine when markets will start to move higher here in the coming future. What's really causing the scare that's got us in this capitulation phase as well as accumulation or potential accumulation phase? So let's go ahead and dive straight into it, guys. First off here, taking a quick look at the market in the sense of Bitcoin, we're generally pushing sideways here still. No different here from the general range we started back in May post-correction. And again, we've started to see a lot more green days and positive volume coming in since back here on June 22nd. Right? So Bitcoin itself holding there a little bit below the 35K range, just pulling down a little bit over the last 24 hours. But if we spent a lot of time here talking about Bitcoin over the last week or two, I really want to spend some time to dive back into the conversation about altcoins. Because Ethereum, since back here on the later part of June, right, just passed over this past week, we've started to actually charter up about 12% against Bitcoin, back to the range we're at back here on June 17th, back here on May 24th in the early part of the day, and then here before we had kind of the last final blow off top here on May 7th. So really not doomsday price action, right? Usually that you would expect with altcoins. You usually expect altcoins to just completely tank, but in reality, from top to bottom against Bitcoin, only down about 25%. Now, I understand very clearly in US dollar terms, yeah, it's a little bit more brutal than a 25% correction, right? It's about a 50% correction, right? Going from around a little above $4,000 down to around the low $2,000, $2,100 range. I get that. But taking that into mind, we want to focus here predominantly on our positioning of altcoins versus Bitcoin. Because as you all know in this case, I love altcoins at the end of the day, and I love Bitcoin as well. I really don't have a central bias towards one way or the other. I don't care where I position myself. I want to position myself where I can make the most money in the market. I want to be able to win out in the market, right? So we can't be emotional or tied to any projects. And fundamentally, even though there's ones that excite me, it doesn't really determine my investment thesis. I'm not tied or married to any of these projects, and neither should anyone out there with their investments, right? Now, I want to go ahead, and as we see this strength here in Ethereum, I want to point out something that's very interesting. If we look at the longer term time frame here for altcoin dominance, I understand very clearly how some people could start to get concerned about the current state of altcoins, as we are generally around where we were back here in early May, here during the correction, and then of course we've been setting in this kind of consistent low range here, similar to where we had on the May correction. But there's a few things I want to emphasize. Both on the longer term time frames, I'd like to point out that even during the last bull market, we had many substantial corrections in altcoin dominance. So for example, we had nearly 46% one here. From here, top to bottom, of course, there are some anomalies in the data, anywhere from a 33% down to another 44% correction. And again, considering anomalies or some major potential distortions in the market, anywhere from a 30 to 40% correction. So last time around in 2017, where we really actually started to see altcoins as a market form. And you guys know I usually don't like to isolate to one specific market cycle in this case as an example. But as you all know, going back in this case, prematurely in this case, altcoins really weren't a market before that. You had very, very one-off coins like Namecoin or a variety of other cryptocurrencies that would just pop up out of nowhere, and then they would crash and die off because there was no established liquidity or substantiality behind them. Right? Everyone saw it as kind of a way to very quickly make money in the market, or in this case, there just wasn't enough substantial liquidity or exchanges available to really build a market around it and find price discovery. So we have to use 2017. And what's really interesting is that though this correction might seem so dramatic and even has a similar time frame than previous corrections, take a look at this. From top to bottom here, right? We can even use the low point here, but let's just go ahead, generally speaking, and realize that anywhere from around a 13 to 15% correction, that's what we're working with. It's really not that substantial. We're not seeing a massive absolute sell-off of altcoins against Bitcoin. And if we dive into the shorter term time frame here, considering the longer term trend here that has been overwhelmingly bullish since the start of the year, really has been the year of altcoins here. The major thing that I want to focus on is that after the, again, as we reported back a couple of videos ago, everyone was very worried that altcoin dominance had broken down, and I said, guys, this doesn't look right on CoinMarketCap, here on TradingView, practically every source we looked at, the number was reading something way off. They were reading various different levels, and that tends to happen when there's massive moves in the market where the actual compilation of market dominance is not able to calculate properly. And we can see here on TradingView, right, that we still actually didn't break past the previous lows here. We've been ticking up higher ever since. Now, I'm not here to say, guys, that it's not likely that altcoin dominance is going to go down. There might be a very good chance here that after going from 27% in just a couple months all the way up to a big even level such as 60%, 3/5 of the market, and considering that there is a decent amount of froth in altcoins, right, there might be a very good chance that things start to pull back. But there's also a chance that something else can happen, that altcoins can hold their ground, and that value starts to flow from a variety of speculative and very illiquid plays into substantial plays in the market. There's a lot of cryptocurrencies out there that do have solid fundamentals, but we don't want to base ourselves off just those fundamentals. We want to look at what the charts are showing us. Because if you believe that that narrative is going to happen, then, in this case, there's a chance that altcoins could start to move higher even from this point on, or at least maintain their range and still be a better investment than Bitcoin. Then you want to know what plays are actually materializing, what are showing it within the charts, because the price doesn't lie. You can have as much fundamental love of the project as you want, but it's a matter of what the chart is showing you, what opportunities are in front of you. So we'll dive into those coins in just a minute, just looking at a variety of crypto plays, some large, mid, and small caps. But overall here we can see that we've still set in a higher low here, so we've not breached the confirmation here of a reversal, which is lower highs and lower lows. And outside of that as well, what we're going to watch for, we're not exactly bullish here. We want to see that this starts to charter up and get past some of these previous relative highs, right? Some of these lines we have here. And what you can always do as good practice is once you've set in what appears to be a higher low, you can start to drag out these lines. And you can even set alerts on them in this case. So if, for example, we start to roll back over, you can get an alert that says Bitcoin crossing, downtrend line, or bearish reversal line. And you can also do the same up here, being a bullish continuation, right? You can set these different alerts in TradingView by just clicking on the line that you set and clicking Add Alert. And you'll get used to using the tool if you really want to get into it. I think you have to get some of the premium plans to do, I think, more than one alert. But yeah, again, you can just keep an eye on the chart as well. These things aren't moving so rapidly without you noticing that the market's going to be moving up or down, right? So we're generally neutral territory now. It's a no trend scenario on altcoins, right? Not per se more favorable to invest in Bitcoin, but also not less favorable, generally speaking. Let's go ahead and take a look at some of the altcoins. Now, you guys know I am generally, on a fundamental basis, big on Uni, but it's not just a fundamental play that I'm invested in. Outside of that as well, on a technical sense, Uni's been one of the great performers here that we really started to accumulate back here during this phase here in November and December. And we had a major uptick here where we saw, in this case, generally from our entry positions, so far have seen more than a 3x against Bitcoin. Okay? And for a large chunk of my portfolio that's allocated to Uni in this case, I think generally those are the kind of plays I want to watch. I want to watch plays in this case that have shown strong technicals, a lot of excitement, fundamental developments. But generally speaking, putting all those aside, let's just take a look at price. What is price doing here? Well, what's really interesting is that, as we talk about a lot on the channel, one of my favorite technical patterns to look for, or per se things to analyze within TA, is how support and resistance marry each other at specific lines of price action. And what I mean by this is that you have these tendencies in price to treat this consistent level, in this case. So once you have a few points of support and resistance in price, you can start to architect these specific price ranges to watch for future support and resistance. So taking a look here, we've got this major decline here. And so a significant amount of buyer volume come in, pushing up the price, making the wicks very tall here. And then we broke down below there. We broke down those previous lows, set in a high here. And what this allows for, this allows us to actually get a line of price points that we can watch for going forward, right? What's really interesting is that you can see here that as we broke higher here after the rally and came back down, buyers tended to come around this general range, just like they are here. That's a bit subjective. If you really want to actually get a little bit more specific price points, you can dive down into the daily chart, right? And what we can see here, if we line this up more accurately, right, with those highs and lows, you start to get a very clear picture about why people are buying here, and buying here. Last two times we touched this line, considering this point of support, this point of resistance here, buyers came in and drove prices higher against Bitcoin. I'm not here to say that Uni is all that great in the sense that it's a US dollar price. It's like most things in the market. It's pulled back quite extensively. But same principle applies here. Look at this, right? Generally speaking, you get the midpoint here overall for the cycle, right? You can even see here, right, as we came over here, came down, made support here, again, third time's possibly a charm here, where prices are going to start to slowly move up over time. It's not going to happen rapidly as fast as you or I probably think. To be completely candid, guys, I'm here to tell you as honest feedback as I possibly can. People's expectations for movement in the markets are very, very quick. They tend not to be that way. But what's really great in the logarithmic is you almost got this kind of S curve here, where basically we can start to possibly swing back up and start to charter towards higher levels and maybe hit towards some of those ranges we had. We got very close here to Uni at $50, which is our initial prediction. But it might be that the next go around, and maybe within this cycle, later on within 2021, 2022, no matter how long it takes for the recovery, maybe we can start to charter to $80, $100 on Uni. Which, again, guys, to me, for a large cap play, it's pretty good returns. But we'll have to see if that happens. I'm not here to guarantee that by any regard. Let's go ahead and take a look at another play that we talked a good amount about. Litecoin, right? Another large cap play in the market. Another, to my knowledge, still a top 10 play within the crypto space. Let's take a look at the Bitcoin chart here. We're still generally at the historic support range or buy zone or entry zone that has been holding up here, excuse me, since back in March of 2015. Now, is there a chance that Litecoin could break down below it? Yeah, sure, anything's possible. But we're trying to turn towards history being on our side here, longer term time frames helping us out. And generally each time, right, just like we had here back in early March, right after we entered into the trade, we had the spring up in price. Now sure, value has started to come down here, completely understood, right? The breakout here was not happening at an optimal time because the market entered into a general bear market, or in this case, a mid-cycle correction. I know the bears are gonna use that one against me. I'm just teasing, guys. But generally speaking, you've got this correction here, right, in the market, or potential bear market. Right? We'll keep open to that. But overall, we're still at the general entry zone. And what's nice here is that if we dive into the shorter term time frames, we can start to see we're starting to charter up here a little bit, right? Just like we analyzed with Ethereum, since the lows, we've been able to chart up around 12%, anywhere from 11 to 12%. Still holding up around the same general range here as May, not really moving much lower. Now, what would be great to start to see is a slow build up here where we can start to test some of these clear resistance ranges, right? You got resistance playing with the price range here at around 50, I think it's around, probably around 500,000 sats. Right, this is definitely going to be a point of resistance. Then you've also got the previous peak here against Bitcoin, as well as this general range over here, which is again another general big even level of 70,000 sats. Right, these are going to be points you want to watch for, where we can break above them, make them support, and build a slow build up over time. Because it doesn't seem, considering how long term this cycle is going to be, if we are still in a bull market, right, it's going to be a nice slower build up. It's probably not going to be as vertical. Whereas at about a 6-week period or 8-week period, Litecoin just absolutely, quadruples against Bitcoin. Right? It's just not going to be that easy this time around. And Litecoin, again, doesn't have the same momentum as ETH and other DeFi tokens, or generally other layer 1 protocols or layer 2 tokens. It just doesn't right now. That's just being candid. But again, I think Litecoin overall, I like this technical pattern. And again, you will never be able to doubt in this case that people do see Litecoin as how silver is to gold, Litecoin is to Bitcoin. simply put, right? That's a market dynamic we can't ignore. It's perception, it's a narrative, and a lot of people do follow that in their investment thesis, not to mention it does have cheaper payments, right? Because if it's more frequent block times. Now, next up, I want to spend some time to talk about Amisa Go. This was a trade I was hoping would have gone through a little bit earlier. Luckily, it's still been a generally positive trade against Bitcoin. In the sense of dollar terms, we're down a decent amount here, like a lot of other cryptos. But in regards to Bitcoin here, which is really what I want to focus on as a trader, because my thesis is that Bitcoin's going to eventually, over the next coming months, recover back to its highs. And I want to find altcoins that are going to outpace Bitcoin, right? It's putting aside what happened here the past month in May and focusing on the future here, right? So what I'm focusing on here is this general expanding channel, general points of expanding resistance. You really draw this upward or downward, doesn't really matter, right? But you've got this general line of support as well with rising highs and rising lows. And to me, this is an exciting setup because if you can get generally within these kind of expanding channels, there's a lot of ways you can call this technical pattern. Overall, the bullish setup that you want to look for, one of the best setups you can look for on a cryptocurrency like Amisa Go, which very clearly has always been a momentum play when it enters into a spring up in the market, is we want to see a retest back up to these highs, right? And it's probably not going to happen that quick. It'll probably happen throughout the summer. A higher low here, possibly at previous resistance, but just generally significantly higher from this line of support, wherever this is expanding to. Having a breakout here and breaking past the channel, that's where you can get something very exponential, right? Again, I'm not saying that this could happen in November, or I'm not, just don't take the time frames really into consideration. What we want to watch for here is letting the pattern play out, right? We don't want to rush this thing, let it do its thing. And the bigger this builds up, the bigger this continues to kind of go sideways and people start to accumulate, the bigger the spring, right? I think it's there was a quote from Kathy where it's like, the longer the base, the bigger the breakout, right? So that's the thing we want to watch for. All right, next up, let's take a look here at Link to Bitcoin. This is a long-term chart here on the sense of crypto. Long-term is 2019, 2018. We can see here that back since all the way here in 2019, we've had a consistent support range with these significant lows here back in May of 2019, here in January 2021, and outside of that as well, here in June 2021. Chainlink, one of the few altcoins that really had its strength during the summer before the real altcoin cycle we had here this year, more during the DeFi summer, which has still been holding up though. I gotta say, guys, like, look, like, to be completely candid, if you want to go out and kind of bet on like small cap cryptocurrencies where you have to deal with rug pulls, you have to deal with lack of liquidity if you're trading sizable volume, if you want to deal with just like outright projects that just haven't really formulated themselves, that are nothing more than white paper or a couple lines of code, and possibly make 10, 20, 30x returns, that's completely fine. That's fine. But I gotta be honest with you guys, I think for the average investor in this case in crypto, for the allocation that they have, you want to make sure you have those bets. They're going to make sure you don't miss the train, that you don't lose it all. It's the same reason why I don't promote leverage trading here. In fact, I despise it on this channel. And to be honest, if you can get a cryptocurrency that, here from a little over 2 years ago, gave you a nearly 600% return against Bitcoin, I mean, that's bear in mind where we're at right now, right? And considering what it had done before, which was a 2,000% return, if it returns back to those relative ranges against Bitcoin. I mean, why try to take on anything else? Right? Chainlink we talked about since as far back as 2018 on the channel. Right? It's one of those kind of bets that aren't hard to make, right? And I'm not even the biggest fan of Chainlink in the world, but I'm not a link marine in that case, as some people call themselves, right? But I just want to generally talk about the thesis of the importance of having liquidity, having general mainstream understanding in the market of investors, and having proper technical patterns. As we talked about at the beginning of this video, all those things do matter, they're important. And that's why you tend to find correlations between at least some fundamental development and some fundamental adoption and interest. At the same time, though, we want to make sure those technical patterns are playing. And generally seeing here that we're holding in a nice consistent support range, Seems like third time might be a charm here. And then we can continue to sprint up. Excuse me, I just accidentally have an old printer into the desk. But you can see here, overall, we're holding on this nice support range. That's what we want to watch for, right? So again, the link I'm holding solid, right? So next one I want to talk about is actually one of the small caps that I've been working with overall, which is Benchmark Protocol. As many of you guys know, I'm an advisor to the project. I love Benchmark Protocol, and generally the concept I find very interesting in regards to rebase currencies. I think that there's a lot of experimentation and exciting use cases to have kind of an autonomous central bank on chain that would be able to help to mitigate volatility. This is one of the beautiful use cases of the ability to print money and also contract currency supply. Unfortunately, there's not much of a contraction in the traditional system. This idea of rebasing currencies is like a trustless, decentralized bank that follows the operations of code and helps to mitigate and provide stability when it's needed in financial markets, right? And one of the cool things about Benchmark is even though it has pulled back a decent amount here since really this whole period of time here in May, as great as it's still holding here towards January, not to mention we've got the same kind of pattern or at least the same type of trend line that we're watching for here that we just talked about earlier with Uni and a variety of other cryptocurrency plays. And that's considering significant points of support and resistance, right? This general kind of midpoint here before we had the major breakout, right? We had the first kind of wave recovering the losses from this general previous peak here. And you can be kind of nitpicky about it, right? But overall, generally speaking, this is kind of the midpoint here where we had the secondary wave or pulled higher. And now it looks like we're coming down. And no matter if you want to be kind of more pessimistic, waiting for it to come down here, right? Or if you want to say in this case it's broke the trend line, you can kind of take your analysis as is. That's perfectly fine. But I think what's so great is that you've got a ton of these DeFi plays in this case, like Benchmark, which again, I have invested in with my own capital, bear in mind. I want to be very transparent about that. Right? It's not just because I work with the project. There's a lot of other cryptocurrencies in the DeFi space that are at really nice discounts that haven't stopped building in the market and are starting to showcase technical discount ranges that get quite interesting, right? And again, this goes for a variety of different plays out there in the market, not even just DeFi tokens. But again, I think it's very, very important to keep an eye on this. And one important thing I did want to share here that I thought was really cool was back about 2 weeks ago in this case, the Benchmark Protocol came out with a really new, exciting announcement where they're partnering with a Graph, which is one of the largest querying and data information protocols in the blockchain space. It's really been at the centerpiece of the DeFi ecosystem. And we've used it at Digifox, and a variety of other projects have utilized the Graph before. It's a really, really cool piece of technology and protocol overall. They have a really exciting announcement that I highly recommend you guys read through here within their Medium article, so you guys can dive into the details for that. But again, the Benchmark Protocol has been continuing to move forward and building things, so I've been really humbled to get to work with the team on it. And last but not least, I want to take a look through one other play here. Excuse me, actually, I didn't want to dive into FTX token. I was doing some extra TA here. What I do want to talk about, not to say FTX token might not be a good play here to watch, but again, this is going to be one that I'll keep an eye on over time. The last one I really want to watch here or talk about is not so much a cryptocurrency or a chart. What I want to talk about here is really the macro event that I think will determine when we get our kick up and rebound in the market. Because I think we all know that if altcoins are leaving the station, Bitcoin's got to leave the station too. That basically means Bitcoin's got to start going up, right? There needs to be new inflows into Bitcoin so that liquidity can start to trickle or at least keep up with Bitcoin, right? It's one of the biggest benefits of Bitcoin in a market where altcoins and Bitcoin were both down and altcoin dominance is riding quite high, right? The major thing I want to talk about here is the absolutely massive drop we've seen in hash rate. I think the peak is somewhere around 180 exahashes. That was back in April or May. We have declined all the way down to about a 1/3 level, around 60 exahashes. Now, luckily, there's been a spring up here, right? You can see the lows here were a little bit lower, around 58 exahashes, and the peak was a little bit lower in this case, around 171 exahashes. Nearly 2/3 of the hash rate getting cut off. Now, of course, we have started to see a bit of a rebound here in this case, a very significant exahash rebound. But I want to go ahead and dispel kind of two misconceptions here, right? Or talk about really two topics, one of them being a misconception. a lot of people say, oh my gosh, this is the end of Bitcoin here. Not really. We really came back down to a general rate of exahashes that we were at, with the general hash rate we were at here back during the summer of 2000. I think technically we first hit this range in the summer 2019. Right? We can go ahead and zoom in, get a good range on that, right? Same range as the low here, back here. Yeah, right around generally July, August in this case of 2019. Price is not directly correlated with hash rate, but this general scare that there's not going to be the same secure hash rate to secure the largest multi-hundred billion dollar, nearly trillion dollar digital asset known as Bitcoin, that scares a lot of people. Right? That is something that I think anyone should be concerned about. However, what's great is that the hash rate isn't just going to evaporate, but it's going to be a slow and steady process here over the next coming weeks and months for those miners to do two things. One, to ship across the world to other different regions of the planet. And second off, in doing so, what you need to do first is make sure you have the power plants, the energy sources to be able to supply these miners. And generally put, all those miners in China, all that the exahashes of hashing power and those amp miners, they need to find a home. And it's going to take some time. But in the meantime, to start playing into that shortage, other miners internationally are going to start to turn on their machines. It's extremely profitable right now for any miner in the world to make money on Bitcoin, even with the price decline. It's a sweet opportunity, and as more and more people get those machines back to another country and they start flipping the machines on and breaking up that hash rate in this case, in that case, you're going to start to see a clear trend reversal, in my opinion. Right? Again, there's no direct correlation where, in this case, if hash rate moves up 20%, Bitcoin moves up 20%. It's not that simple, but this has obviously caused some concerns. We cut out 2 years, nearly 2 years of beneficial growth for hash rate. Luckily, though, this probably won't be very long-lived, depending on your time frame. I think a couple weeks to a couple months. And that's going to give us the grounds where liquidity can return back to Bitcoin. The absolute China FUD that dragged down the market yet again, as it always has, will recover slowly but steadily. And perhaps this next time around, all the liquidations that caused the capitulation and exaggeration in the decline, perhaps those of you out there who are maybe fans of this channel, or other people out there that you may know, perhaps they won't engage in leverage trading like they did before. Or perhaps they'll learn how to use credit more wisely and make sure to mitigate the risk. Who knows? We can only hope. We can only hope for our brothers and sisters in that case to make wiser decisions. But anyways, guys, that's it for today's video. I know I've rambled on enough for today's video. If you guys liked it, please consider dropping a like, consider subscribing and hitting the bell icon if you haven't. And outside of that as well, if you guys are interested in supporting me, you can consider possibly signing up tomorrow for the Dash Report. We're going to be launching our newest edition of the newsletter where we cover cryptocurrency markets, we cover equities, commodities, Forex, and give the whole macro analysis of what's going on across the globe from what we can see. And again, we have a great community there that you guys can join and be a part of. So if you guys are interested, let me know by checking out the link down below in the description. That being said, guys, thank you all so much. And if there's anything you want me to cover here on this channel, leave a comment down below. Take care, everyone, and I'll talk to you all soon. Have a wonderful day.